Welcome back to History with Dr. T, where we decode the market and uncover the potential of your investments. Big news has just dropped in the crypto world, and it's causing a stir among investors. Are Bitcoin ETFs the future of cryptocurrency investing? Let's dive into the details that are shaking up the markets. Before we start, hit that like button and subscribe for the latest financial insights and trends. Now let's get into it. Background on Bitcoin ETFs. Exchange-traded funds, or ETFs, have been the buzzword in investment circles for quite some time. And when it comes to Bitcoin, they've been a game of anticipation and speculation. Recently, Bitcoin prices soared to a staggering $47,900 following a tweet from the Securities and Exchange Commission hinting at the approval of a spot Bitcoin ETF. This move was like a spark in a field of dry tinder, setting the market alight with excitement. But the plot took a twist. The SEC clarified that their X page was hacked, and the tweet was nothing but a fake. Despite this, Bitcoin has maintained a strong foothold, more than doubling in value over the past year, saying a firm goodbye to the crypto winter of 2022. Craig Erlam, a seasoned market analyst at Oanda, put it succinctly: Bitcoin has stormed higher again on the back of more ETF chatter. The sheer excitement over the prospect of a spot Bitcoin ETF is undeniable, and it's this anticipation that's fueling market movements. But what does this all mean for you as an investor? Stay tuned as we'll reveal just that. The crypto winter thaw. Let's take a moment to appreciate the sheer scale of Bitcoin's comeback. Just a year ago, the term crypto winter was commonplace, with prices cooling down across the board. But fast forward to today, and Bitcoin is trading at levels we haven't seen in nearly 2 years. The resilience of this digital currency is nothing short of remarkable. And according to Craig Erlam from Oanda, Bitcoin has stormed higher again, on the back of more ETF chat. The market's response? A clear thumbs up at the mere speculation of a spot Bitcoin ETF, signaling a bullish outlook for the cryptocurrency's future. SEC's decision and market reaction. The rollercoaster didn't end with just a tweet. The real twist came when the SEC actually approved rule changes that allow for spot Bitcoin ETFs to begin trading. This is a significant milestone, as it paves a smoother path for both institutional investors and everyday traders aiming for a slice of the Bitcoin pie. This decision didn't emerge from a vacuum. It follows a pivotal ruling last summer by a federal appeals court that flipped the script on the SEC's previous stance, criticizing it for being arbitrary and capricious in rejecting Grayscale Investments' application for a spot Bitcoin ETF. Spot versus futures ETFs. So what's the difference between a spot and futures ETF? Think of a spot ETF as buying the actual Bitcoin right here, right now. It's about immediate delivery at today's price. On the other hand, futures are about bets on where Bitcoin's price will be down the line, with contracts locking in future prices for later delivery. The ProShares Bitcoin Strategy ETF was a breakthrough in 2021 as the first ETF linked to crypto that wasn't just about stocks. And it didn't just walk onto the scene. It sprinted, amassing over $1 billion in just 2 days. But until now, a direct tie to Bitcoin's spot price has been the missing piece of the puzzle. The potential impact of spot Bitcoin ETFs. With the introduction of spot Bitcoin ETFs, we're looking at a new dawn for investment advisors and wealth managers. They're poised to integrate these products into broader financial strategies, offering a more direct route to cryptocurrency exposure. Gautam Chugani from Bernstein is betting big on the future, estimating that total managed crypto assets could balloon from the current $45 billion to $50 billion range to an astounding $500 billion to $600 billion in the next half-decade. The broader implications. Julius de Kempenaer, the senior technical analyst at StockCharts.com, weighs in with optimism. He believes this ruling opens doors to a wider pool of participants, potentially leading to increased turnover, adaptation, and influx of investors previously hesitant to dive into crypto. However, it's not all sunshine and rainbows. The only cloud on the horizon could be the strict regulations that may accompany the buying and selling of these Bitcoin ETFs. But that's a bridge to cross when we get there. Immediate effects and future predictions. In the wake of the SEC's decision, spot Bitcoin ETFs could hit the markets as early as tomorrow. Firms like Grayscale, ARK Invest, and Fidelity aren't just watching from the sidelines. They're already in the race, having submitted their applications for launching their funds. And with asset managers clamoring to get a piece of the action, we're seeing a competitive edge as many issuers like Invesco start slashing fees to attract early investors. This is great news for you if you're looking to get in on the ground floor. Investor considerations 90950. Considering a Bitcoin ETF? Karim Noorani from Linkto reminds us that there's a layer of protection with ETFs. They offer a shield against the notorious volatility and complexity of cryptocurrency markets, not to mention the threat of hacks and scams. But let's not get ahead of ourselves. Cryptocurrencies are still a highly speculative venture. If you're pondering dipping your toes into this digital currency pool, remember to do your due diligence and only invest what you can afford to lose. Conclusion. To sum up, Bitcoin ETFs might just be the turning point many investors have been waiting for. But as with any investment, knowledge is power. Make sure to do your research and stay informed. Like what you've heard today, hit that like button, subscribe for more insights, and drop your thoughts in the comments below. Until next time, keep your investments smart and your portfolio diverse.